form submission.
Okay.
Heloisa Cheney. Hi, everyone. Welcome to tonight's episode of Tuesdays with Terry. Tonight, we'll be discussing buying a home in today's market. But we're going to just wait a few minutes and give people a chance to sign in. This is also available for viewing at any time. You can always go back to the Facebook site that you're on right now and view this later. We also have other episodes. We've had episodes on just about everything you can imagine about buying or selling a house. Uh, we are going to bring some guests in the next few weeks and talk about some other current topics dealing with the today's market, especially insurance, homeowners insurance. A lot of people are seeing increases in their uh, policy. So we'll get somebody from the insurance industry to come in here and talk to us about that. Let's see what time we have here. We have 7 o'clock. Give it a couple more minutes. See if anybody else is going to sign in. Generally, we have these every Tuesday. It's been a while since we've had one. We took a bit of a break. I felt like we had covered a lot of the topics. So we thought we would take a break and start over again. We're also going to start with a home buyers class. That's usually a 3 or 4 week episode continued, so we can actually take you through the steps, and you have the opportunity to work with us uh, each week on the steps. We'll help guide you through, answer any questions. If you have any questions tonight, simply type them in, and if we don't answer them tonight, we'll certainly get back to you. Uh, we'll also, you can send us questions at any time, and we'll be glad to answer those for you. So let's get started here with tonight's episode. Um, I think most people know that we're in a very different market right now for home buyers and home sellers. This is what's called a seller's market. The reason it's a seller's market is simply basic economics. It's supply and demand. For whatever reason, people are not placing their houses on the market right now, possibly due to COVID. They don't want to move right now. They don't want to have people coming through the house. Although the real estate industry has changed somewhat since the pandemic, in that we are a lot more virtual now than we were in the past. And many people are buying houses uh, sight unseen without even stepping into the house until they buy it. Now, that doesn't mean that they haven't had somebody, uh, go through it with video. They've had a home inspection, they've had an appraisal, they've had a survey. So they've had all that stuff, but they just haven't actually set foot in the house. We're seeing that more so with some of the younger generation that are more uh, comfortable with technology. But today's market is different than we've seen in a long time. Interest rates are low, and prices are high. Now, with that being said, there are still expired houses every day. 20, 30, 40 houses a day go off the market because they were on the market for 30, 60, 90, 120 days and they didn't sell. So they're no longer on the market. So it's not like every house is selling in 3 to 5 days. In fact, the average days on market right now in Palm Beach County is it's hovering between 54 and 58 days on market. So trying to move the screen here to the next slide. And I seem to be having a problem. There we go. Well, here's a little flyer that I put in. I thought we could go over quickly. 6 tips to win in a hot seller's market. I'm just going to look at this on my phone. It's a little bit easier for me to read. I can enlarge it. Now, these aren't necessarily in the order that I would put them in, and we'll discuss that later. First of all, number one, accept current market realities. It's a seller's market. Be ready for competition. So we've all heard the stories. Open houses have 30, 40 people come. People are getting 40, 50 offers on a house. Houses are selling for 30, 40% above the list price. That's not the norm, but it is happening. Number two, cash is king. Sellers love all cash deals with a quick close. Well, they do like cash deals. And with cash deals, in reality, everything's cash because at closing, the seller doesn't get a bag full of cash. The seller gets a wire transfer to their banking account of their choice. So they're not really getting cash. But the difference is with cash, there's no lender involved. So they're not requiring an appraisal. They're not requiring a survey. They're not requiring an inspection. And with that said, they're also not requiring repairs. So it's pretty much whatever's in the contract that's agreed to, and it's off you go. There's no loan process. There's no approval process. So that's the main reason that that sellers like to see an offer that's all cash. Pre-approval letter, pre-qualification. If financing, get pre-approved if you can. Well, there's no sense wasting your time with the pre-qualification. It doesn't mean anything. Basically, that's just what you tell a lender over the telephone, and they'll give you a pre-qualification for pretty much whatever you tell them. Pre-approval is a little bit deeper dive into your financial situation. And most sellers or listing agents won't even accept a pre-qualification letter. And in this day, you can't submit an offer. An offer won't be accepted by the listing agent if you don't have a pre-approval letter that covers the cost of the house, or you can show that you have the cash to either make up the difference or to pay all cash. When financing, close as quick as possible. Quick closes are ideal for sellers. Well, we'll discuss that a little bit more later, but not all lenders can close quickly. Oftentimes, a lender will tell you it takes 30 to 45 days to close a loan. And there's a big difference between mortgage brokers, mortgage bankers, and banks. Banks are probably the slowest to close and come up with the most issues once it goes to underwriting. So that's something we can discuss later. Be flexible with contract terms, paying for items typically charged to the seller, i.e. home warranty, or being flexible with other terms that can help get a deal done. Okay, we'll discuss that in a little more detail in a few minutes, but basically what they're saying is you can make your offer stand out um, if you drop some conditions. And those come with risks, and we can discuss that in a few minutes. Use a trusted buyer's agent. Having the right agent can make all the difference when you're in the market or you have questions. Reach out. Well, I would put this first because in this market, you really need an experienced agent that understands the market and understands uh, the ins and outs of the contracts and the negotiating process. What you don't want to do is do some of the things that we'll discuss in a few minutes. You don't want to place yourself at risk just to get a house, and you certainly don't want to overpay for the house. But if you're financing the house, that's not something you have to worry about because you won't be overpaying because the bank won't give you the money. So, like I said, number one is find an experienced realtor. And it's not just experience, it's got to be somebody that you feel comfortable with because this is a big, um, this might be the biggest purchase you've made so far. Um, where you could be a first time home buyer or you could be somebody, that's up in the $1 million range. So you could be going back and forth for a while on this, especially in this market. So it has to be somebody that you trust and you feel comfortable with. I think that's number one. That's the first thing you need to do. You shouldn't really go out and start talking to lenders until you talk to a realtor because everybody's situation is different. And every realtor works with more than one lender. So depending on what your situation is, we might have a lender that works better for you than somebody else. Get pre-approved, not pre-qualified. That's very important because if you send an offer to a listing agent in this market with a pre-qualification, they're probably going to just send it back to you. Or you're probably not going to, with 40 or 50 offers, you might just never hear from them. So make sure you have a pre-approval. Gather all the documents that you're going to need for the full loan application because the pre-qualification is not the loan application. Let's say that you jump ahead and say your offer is accepted. So now what do you need to do? Now you have to do a full loan application. And now they're really going to do a deep dive into your financial situation. They're going to ask for documents. Now, this is all done online now. That's another thing that's changed since the pandemic. A lot of a mortgage I'm sorry, I lost my screen here. It just went off. I'll try and get that back. Thank you. So the lender's going to tell you what documents they're going to need. You should gather all those documents and put them in a file because once your offer is accepted, you want to move quickly. You want to get that loan application done. You want to start the process because the sooner you start the process, the sooner you can close. And be prepared to move quickly. The best process is for your realtor to set you up with a search on the MLS. And every time a property hits the market that meets your qualifications, you'll get an email. And you need to look at that email and you need to look at that property. And if it's something that you are really interested in, then you need to do whatever you can to get out and see that property that day because it might be gone the next day. And even if it isn't gone the next day, you want to get started so you can get your offer in and maybe get it accepted before anybody else. Whether that means setting up a showing on your lunch break, setting up a showing after work. Now that we have the time change, uh, we still have light out. You can still go out and see properties till later in the evening, or you can have your trusted realtor go to the house and do a video or do a Facebook Live. And then you can make an appointment to go see the house. Or once you've seen the video, you can start the process and then set up a showing for the next day. But at least you started the process with an offer. And don't waste time looking at houses you can't afford. Now, I know several years ago, right after the recession, when most of the houses were foreclosures, uh, people were looking at houses way out of their price range with the thought that they could probably get the person down in price. Well, houses right now are selling for about 97% of the asking price. So that means to get at 97%, that means some are selling for like 106%, 110%, and some are selling for maybe 90%. So, the houses that need the most work might be selling for a little bit less. Um, but it kind of depends on the price range and it depends on the neighborhood. But, the old saying, all politics is local. It's the same with real estate. So the best strategy in this market is to look at houses below your budget, not above your budget, because you're really wasting your time. They're not going to come down on that price. And if they do, they're only going to come down a few dollars. Um, back in the days of all the foreclosures, people were offering 10, 15% off the asking price. And sometimes they were getting the house. Now they're not even opening that offer. And that's why it's important to get a pre-approval. So they've looked at your financial records and they've given you an idea of what you can afford. So, there are things that you have to take into consideration in that price, and we have calculators that can help you with that. All you have to do is punch in the down payment, punch in the price of the house. If there's an HOA, punch in the cost of the HOA, and it will calculate everything. You put in the interest rate, and it'll tell you what your payment is. You can even estimate what the insurance will be, or the PETA, because on certain loans, you may have to get private mortgage insurance until you get 20% equity in the house. So as the process is starting, uh, especially in this market, don't fall in love with one house. That's how you overpay. I mean, we've all realtors have had clients that do that. They fall in love with the house, and if you can afford to overpay and that makes you happy, that's fine. But if you've fallen in love with that house, the odds are a lot of other people have fallen in love with that same house, and you may be disappointed. So don't put your eggs all in one basket. There are several strategies that you can use in this market to be successful. And it depends on your own situation, your financial situation. Are you buying this as an investment property? Do you plan to spend the next 20 years there, or do you plan to stay there until the kids are older and get them in a good high school? That all enters into the strategy that you use in this market, and we can discuss that more in a one-on-one. Also, if you're out looking at houses, uh, your offers aren't getting accepted, it might be time to expand your search a little bit. Maybe that neighborhood that you felt you needed to get into just isn't it just isn't going to happen in this market. So maybe you might want to expand the area that you're looking at. Excuse me, hiccup. Or look at maybe a different type of house. Maybe look at a townhouse. Maybe look at a condo. Go to a townhouse for a few years, and then move up to a house. So that's what we mean by expand your search. Or instead of a 4 bedroom, maybe a 3 bedroom will work. Instead of a 2 car garage, which generally means a newer house down here, you can get by with a 1 car garage or even a carport. Don't give up. This market can be very frustrating, depending on the price point you're in. It's extremely difficult right now for first time home buyers because the lower priced homes are first time home buyers are in competition with investors that can pay cash. So while a cash offer might not always be the best offer for a seller, um, they often don't feel that way. They often feel that the cash is the best way to go. So an investor could beat you out on these houses. Don't give up. Every single day, I see listings on the MLS that were expired. Sometimes 20 or 30 of them, just in Palm Beach County alone. So there are houses that aren't selling. Quick close. A quick close is a good way to beat a cash offer, or at least be competitive. And what do we mean by a quick close? Um, I think we talked about this earlier in the episode that most banks will tell you they need 30 to 45 days to close a loan, and it's usually 45. Uh, However, some mortgage companies, most mortgage companies will close within 30 days. Some mortgage companies can close in 7 to 10 days. How can they do that? Well, you have to have all your ducks lined up in a row. You have to have all your documents ready so that you can get that. If your offer is accepted, you can get that loan application off right away. Um, you have to be prepared to move quickly. And the quicker you're able to move with the right lender, um, and that depends on your own situation, which is why it's important to have a trustworthy realtor, somebody you feel comfortable with, because not all lenders are created equal, and some lenders are better for some buyers than others. But a quick close can seal the deal. Let's say you put an offer in, it's one of the things that can seal a deal. Let's say you put an offer in and there were 40 offers. They're asking for highest and best. Uh, and if you're looking at houses at the low end of what you can afford, you can always increase your offer a little bit, or you can have your lender call the listing agent and tell them how quickly they can close, that they've already gone over. There are some lenders that will actually um, do a loan approval right from the start and have it go to underwriting right at the start. That really makes it quicker. But that's not for everybody. It just depends on your situation, which is why it's important to really sit down and have a one-on-one with a realtor. It doesn't have to be in person, uh, so you guys can really have a meeting on some of these issues so that everybody's on the same page and you're all working for the same goal. Now, as far as making your offer better, uh, there are a lot of things that are popular right now that you read maybe on Zillow, that you read on Realtor.com. And speaking of Zillow, Realtor.com, everybody goes there and looks at that information, and that's fine. The most current information, of course, is from the MLS. They get that information from the MLS, but it's not always that current. Okay. But it can still give you an idea of what's on the market. Uh, Generally speaking, 99.9% of the houses that you're going to see on Zillow are going to show up in your search that your realtor has set up for you. If it doesn't show up, it's because there's something that the seller has stated they won't accept in Zillow and Trulia and Realtor.com. They don't pick that up. I mean, some listings will say no FHA, no VA. They'll say cash only. Well, you don't get that from Zillow.com. So it's fine to look at Zillow.com and then just let your realtor know what you found. So some of the things that are proposed to make your offer stronger are waiving some things in the contract. First of all, waiving contingencies. What does that mean? Well, there's an inspection contingency. Most contracts down here are as is contracts, meaning that you're buying the house the way it is. Does that mean that there can't be repairs? Sure, you can still negotiate some repairs, but the understanding is that you're buying the house the way it is, and it's not a new house. Um, so you can waive the inspection altogether. Generally, an inspection period can be 15 days. That usually doesn't fly in today's market. So, you can shorten the inspection period to 5 days, 7 days, 10 days, keeping in mind that the inspection period is your grace period. During that inspection period, you can get out of the contract and get your earnest money back. So when your offer is accepted, they're going to ask for some money. They're going to want you to put some skin in the game. And it's usually, somewhere around 3% of the sale price that you have to give them in cash. Now that will count towards your down payment, but if you pass your inspection period and then find out you don't want the house, the odds are you won't get your deposit back. So you can waive the inspection contingency. I don't advocate for that. You can waive the appraisal contingency, meaning that doesn't matter what the house appraises for, you're going to buy it. How does that come into play? Let's say you put an offer in on a house for $250,000. You waive the appraisal contingency. Well, you're financing, so the bank's going to have an appraisal, which you pay for, and the appraisal comes back at $243,000. So there's a shortage of $7,000 there. Well, if you've waived the appraisal contingency, then you have to come up with that $7,000. And if you don't execute the contract, then you'll lose your escrow money. So you don't want to waive the appraisal contingency unless you're comfortable that you have enough money to cover any shortfall, because the appraisal contingency is another way you can get out of the contract after the inspection period. If the house doesn't appraise, well, you can't get the loan, you can't buy the house. Appraisal. If you're financing your house, you can't waive the appraisal. However, if you're paying cash, you can waive the appraisal. This is where cash is king comes in, because cash is king, they can waive the inspection contingency, because most of the time their investor, they walked in, they can pretty much eyeball what needs done and how much it's going to cost. So they'll waive the inspection. There's no lender, so they'll waive the appraisal. That's one of the ways that cash becomes king. And a quick inspection is something we just talked about. That can make your offer stronger. You can also say in the contract to purchase, which is actually called an offer to purchase, that you won't request any repairs. Well, if you're going to do that, you better have a pretty good eye for the house, because there could be foundation issues, there could be structural issues that aren't readily apparent. So I would not advocate no repairs unless you're going to use a renovation loan. For instance, an FHA 203K loan, which is also, you also use that to rehab the house. So in that case, when you look at a fixer upper, that's the type of loan you would use. So you're not going to ask for any repairs. Usually the people that are selling houses like that don't have the money to do the repairs anyway. That's one of the reasons they're selling the house. That's a different loan. It's a little bit more complicated. It takes a little bit more time. But for some of the houses that have been on the market that have expired and have some issues, that might have been a loan that would have sealed the deal and gotten you the house. Now, with those loans, you can't just go in and with the rehab loan, you can't just go in and fix what you want. They have to send their own inspector in first and foremost. All the safety issues have to be repaired first. So at least you'll be getting a house that's safe. Escalation clause is another strategy that a lot of realtors and buyers use. An escalation clause basically is legal language that you insert in the contract to purchase that here's your offer, $100,000. But you'll be willing to go up to $110,000 if they show you somebody that's offered $109,000. So you'll go $1,000 above the highest offer they get up to a certain point. Now, I don't advocate the escalation clause. It basically boils down to your financial situation. Can you afford to do that? Have you fallen in love with the house? And this is a house you want. So you're willing to overpay another $5,000 or $6,000 to get that house. Now, the odds are it's not going to appraise for that amount. Or there would have been more offers at that amount. So you need to have that cash in reserve up to that point. Now, you know, that's another point for looking at houses below what you can afford. Let's say you're approved for $250,000, but you're looking at houses at $200,000. So that gives you a little room to play there. You never know how an appraisal is going to turn out. Sometimes appraisals come right out to the dollar, the exact dollar amount of what you've offered for the house. And sometimes they don't. It all just depends on the appraiser. Sometimes it's hard to figure out. Another tactic that has worked in this market is offering a rent back. So let's say your offer is accepted. Maybe the people really didn't anticipate that their house would sell so quickly. So their house sold in 5 days. Now you're going to close in less than 30 days. They're not ready to move yet. They need time to pack up. Maybe they need to go out and rent a place or find a place to buy. Well, you can offer them to rent back their house. Now, if you're financing the house, you have to be in that house by 60 days. So you can't offer them more than 60 days. However, you know, there are cons to this too. One of them is an insurance issue. your mortgage company has paid for the house. So you're going to have insurance on the house. Their insurance, the seller's insurance isn't going to cover it anymore because they don't legally own the house anymore. Money has changed hands. So um, the safest way to do it is to have your insurer insure the house with them as a tenant. So there's some complications with that. What if they don't move out? There's a moratorium right now on evictions. So I'm not an advocate of some of the things that are being promoted right now in this market to make your offer stronger. Some things I am, and there are, and each realtor has some tactics of their own that they've learned over the years, and that's the advantage of working with an experienced realtor. The other option is to not buy now. Say you get frustrated. Your offers aren't getting accepted. You don't want to waive the contingencies. Um, you don't want to use an escalation clause because if the house doesn't appraise, then that's cash that you have to throw in the pot. So you wait 6 months. See what happens in 6 months. Now, the foreclosure moratorium has been extended. However, there is a proposal in the new stimulus plan to help people buy houses. That could happen within the next 6 months. There could be more inventory in the next 6 months. Then the supply and demand comes into play, so the prices might come down. Interest rates might go up. I don't foresee them going down. I don't know anybody, any of the financial experts have advocated that interest rates are going to go down. For a lot of banks, money's free right now. So there's really no reason for them to raise interest rates. However, they can get tighter with the lending requirements. But they're pretty tight right now. It's possible that as the economy opens more and more, as the unemployment figures go down, and the economy improves, that some sellers will get off the fence and put their house on the market, which will mean more inventory, which will mean lower prices. So there are pros and cons each way. The bottom line is it's like investing in the stock market. I mean, unless you're a professional, it's hard to beat the market. If you need to buy a house, you need to buy a house, and it can be done. Houses are being sold every day, hundreds of houses in this market. So there are houses out there. You just have to have a strategy that works for you in your particular case. And you have to have a lender that works for you in your particular case. You have to have, or your realtor has to have inspectors that can come out quickly, termite inspectors, home inspectors, maybe a roofing inspector. You need to get these things done quickly. Roofing inspectors are always hard to get out. They're always busy here in South Florida. So I hope this has been helpful to give you an idea of, everybody knows how difficult the market is right now. That doesn't mean it's impossible, but not by any means. There are strategies that you can use to be competitive in this market. Not always about cash, but for some sellers, they have that bias that cash is king. What I recommend is on the website, on the Facebook site that you're on right now, watching this, you can simply scroll up and request an appointment. Just go to the calendar and request an appointment with me. And We can do a 30-minute consultation. We can do a 45-minute consultation. No obligation. But, I can listen to what you're trying to accomplish, and maybe try and give you some of my thoughts and some of my experience on how you might reach that goal. Um, we'll continue with these Tuesdays with Terry's on different topics. As I said earlier, we're going to explore the insurance situation that has arisen with many insurers in the state of Florida. But we're also going to start another home buyers workshop, which usually goes 3 to 4 weeks. With that, we talk about down payment, we talk about specific lenders, we talk about where you can get down payment assistance, and we talk about the steps, step by step by step. We go into a little bit more detail than we did here tonight. Tonight was just kind of an overview of the market. Everybody knows what the situation is. Just wanted to let everybody know it's not impossible. Um, give it a try. If it doesn't work, sit out for 6 months. See what the market is in 6 months or a year. But that 6 months won't have been wasted. You'll have understood how the process works. You'll have gotten all your documents together, and you're ready to move quickly when that house comes on the market. You can always have your realtor keep you on that MLS search for houses. And you can continue to get those emails right away, or you can get them once a day, you can get them once a week, however you'd like to get them. It can be set up for you. So I hope tonight was informative for you. If you have questions, please text me, call me, email me, visit the website that we have, visit the Facebook site. Have a good night, and hope to talk to you soon.